Tuesday, March 21st, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at why ETFs are no substitute for real gold and silver. So I get that question a lot, and I have throughout the years. What about GLD or SLV? And I tell people that yes, if you want to speculate on the price of gold and silver, you can use that. But that's not what I do with gold and silver. Gold and silver are money. They're not to speculate upon. We all know, of course, that all fiat currency eventually go to their intrinsic value, which is zero. So what's the point of trading real money for fiat currency? Maybe in the short term you want to do that, but yes, we're going to look into that today because with the banking crisis right now, and yes, it seems like it's calmed down for the last 24 hours, but I don't think we've seen the last of it. We saw yesterday that First Republic Bank didn't have a very good day. I think it dropped like 43% and closed around $12. That's the 15th biggest bank. That's the one in line after Silicon Valley Bank. And I'm not saying it's going to go bust, but it doesn't look very good. And what's SLV and GLD got to do with the banks? Well, the other thing that happened with Credit Suisse, with the basically collapse of Credit Suisse and the bailout of Credit Suisse by the Swiss government. Yes, they're saying it was a commercial transaction between UBS and Credit Suisse, but if it was, why did the government have to be involved? UBS would have just bought it because it would have thought it was a good company to buy. But we've seen that there's these AT1 bonds that were basically defaulted upon, and there's about $17 billion in losses, and the smart money, so to speak, very surprised by this. This is supposed to be the safest tier 1 capital stuff, and yes, this deal that the Swiss government, FINMA, which is their regulator, UBS and Credit Suisse decided upon, basically destroyed these people's, these investors' bonds. Just like that. They did it. They decided. So what I'm trying to say here, when you look at GLD, for example, start with the GLD. Who are the trustees here? Well, Bank of New York, Mellon. So I'll just show you here in the list of the top 20 banks in the United States. Number 12, Bank of New York, Mellon. Okay, so that's only a few dominoes away from SVB and First Republic. And even worse, the gold custodian, HSBC Bank PLC here in the UK. That's even worse. HSBC, we know what they've been up to over the past decade. They were given preferential treatment by the Department of Justice in the United States for having dealt with Mexican drug lords and also for dealing with financing or allowing the financing of arms deals with Iran. So that's the kind of institution they are. And they don't go by the rule of law. And then you've got, of course, the poster child of banking corruption. It seems like people have forgotten now about the request by the U.S. judge for Jamie Dimon's communications in regards to the Epstein case. So yeah, JP Morgan Chase, they're one of the custodians, the bank that's paid probably over $50 billion dollars in fines since 2002. Those are the kind of people that are managing GLD. So do you really trust them? And I know a lot of you say, well, I got it in my 401k or my IRA, whatever. Or here in the UK, they say, oh, I've got it in my SIP. I can't buy physical gold or silver, and it's easier. Well, fine, stay in your paper investments. But what I would do personally is not put money into these retirement accounts, because they're just part of this scheme to keep you in the game. If you really want to fight these people, yes, if you have extra funds at the end of the month, buy physical gold and silver. Yeah, it's really simple. So that's what I have to say about GLD. So let's look at SLV. Well, same suspects running SLV. It says here, Investopedia, the assets of the iShares Silver Trust consist primarily of silver held by, JP Morgan Chase, the custodian institution on behalf of the fund. So can you really trust these people? I don't think so. It says here that it's also administered by BlackRock. So all the people that are really not looking after your interests, in my opinion, they're running these funds. And when push comes to shove, and we've seen with Credit Suisse, even the tier one investors have been shortchanged by $17 billion. They will have no problem basically defaulting on GLD and SLV. It will be gone. It's just a piece of paper. That's all it is. But when you're holding physical gold and silver, they can't make it disappear. It's still there. And it's interesting because I think it was around 2009, and I was still working in the city of London. One of my colleagues at work, I had gotten involved or interested in gold and started buying gold and silver. And I think at the time he subscribed to the FT, and he got an invitation to the FT Gold Conference, and he took me along with him. And I remember there's a Q&A part, and I got up and I asked a question about what about gold sovereigns, their capital gains tax-free, or Britannia's. And at the time, they're trying to push the GLD. And they basically said, oh, we're not going to talk about that. We're not tax advisors. They didn't want to know about physical. So coupled with this here, and this is going gold, the pointlessness of holding bullion continues to sink in. So this is the FT again. They don't want you to hold physical. This was an editorial basically saying that gold was useless back in April of 2004. And I cut it out. I thought it was so outrageous in 2004 that they were writing this about gold, that there was no inflation problem, that was useless. Well, and at the time, gold was at $400. I even wrote it here, as you can see. I'm going to put a picture of this on the screen, and you can pause it and read it if you want. I'm not going to go through it, but my point here is that people like the FT and the bankers who finance the FT, really, ultimately the FT is a big globalist mouthpiece. They will tell you one thing, but they're going to do one thing. They're going to have the physical gold and silver, and they want you in these ETFs so that they can screw you, basically. I couldn't put it another way. So what I'm going to do today, after we look at the markets in a minute, I'm going to go through some of your questions from last week. I had stopped doing that. We'll go through some of your questions, and I'll try to answer them as best as possible. So it's 8:20 a.m. London time. We've got spot gold. It's down a bit more, but hopefully I'll be able to buy some more soon. It's at 1968, so it's down $10. Low's been 1962.83. And I think maybe these speculators, people who trade paper gold, because that's all it is, it's betting on gold, on the gold price, they're probably getting out before the Fed's decision tomorrow, which will be very important. Very uncertain as to what the Fed's going to do, which is unusual. So yeah, we're at 1968. The high's been 1985, low 62. Silver's down 15 cents, 22.40. High's been 66, low's been 33. What about the stock market? Well, the Dow is up 70 points. The NASDAQ 100 futures up 32, and the S&P is up 12. To the currencies, we've got sterling down 0.25%, 122.48. The euro's unchanged, 107.31. The dollar is up 0.2% versus the yen, 132.13. Excuse me. And the dollar's unchanged versus the yuan at 687.46. Aussie dollar is down 0.5%, 66.88. The dollar is up slightly versus the Canadian dollar, 136.75. And the Kiwi dollar is down 0.2% at 62.04. Let's look at platinum. Platinum is down $7, trading around $9.90. And high-grade copper is up 0.5% at $3.96. Quickly look at the Treasury market. The 2-year yield is up 9 basis points, just above 4.01. Interestingly, the 3-month bill is up 26 basis points at 4.88. So I think they're pricing in a rate hike here by the Fed tomorrow of 25 basis points. We'll have to see. The 10-year is up 2 at 3.50. So let's go to the questions from last week. And we got a few here, but we're gonna go through maybe the first 3 or 4. Let's have a look. Question 1, and this is from the video. Janet Yellen bails out the top 1% uninsured depositors for now. So the question is, I wonder if the motivation to keep depositors solvent at SVB is so that Ripple, which has exposure at the bank, can remain in a very strong financial position. They can't afford to fail. Isn't there also a connection between HSBC and Ripple? And that's from Grant. I don't know what Rudy's doing there. Rudy, be quiet, boy. Anyway, well, I'm not too sure if it's because of Ripple. I think it's because of 97% of all the depositors had more than 250,000. A lot of these people were well connected. We know that Janet Yellen made about $8 million speaking to Wall Street and tech companies before she became U.S. Treasury Secretary. Don't really follow Ripple too much. But HSBC, probably because HSBC took over SVB UK, which is not the whole thing. So I wouldn't be surprised. So this is Janet Yellen video again, number 2 from Marcos Castro. But Mario, the president, also said that the investors will lose their investments. Why? I thought investments were guaranteed. No, investments are not guaranteed. Deposits up to 250,000 are guaranteed. So we'll do the last one here from Tony B from the same video. What's the best place to buy gold and silver? Can I buy via Hargreaves Lansdown? Tony B. Hargreaves Lansdown. They're a financial company. They're a stockbroker. Gold is not a financial asset. It's like buying a car. It's something physical. It's not regulated by the FCA, gold. The best place to buy gold and silver is through a bullion dealer, and that's Yeah, and I've told people to shop around, but if you want a reputable dealer that's been in business for 40 years, you can check out Gold Investments in London. They're below in the description of my video, all the details. So with that, we're gonna stop here. Rudy is getting a little bit agitated. I'm gonna wish you all a very good day. Take care. Bye.